threatening that low, but the market has bounced back, and it's caused quite a bit of concern or I guess commentary about, is that going to continue? This, of course, the dollar is nothing like the days of 120 that it was in the early 2000s, but it has made a statement here in the last few weeks as to what it might possibly do in the future. On the other side of the dollar, of course, when you have the currencies, you have the euro dollar. The euro is kind of a situation that mirrors the dollar, and it's kind of like a bracket here. You can put a bracket here across about 160, another one across here on the bottom about in the 125 area, and that kind of is a range, a latitude within the market that the market has to work within in 2010. As you can see, we also have this little down trend here, as you would expect in the euro. When the dollar is up, the euro is going to be down. The thing about the euro is that there is no central bank like the Fed. It doesn't, I mean, it has a central bank, but not the same powers. They have a lot of problems in Europe. So, what's the status of the euro going to be going forward? We'll talk about that a little bit more when we get to some of the other charts. But it looks like the dollar, for whatever weaknesses that it has, seems to be kind of the best of the worst, you might say, because it seems to be able to move up while the others are remaining weak. U.S. Treasury notes, you can see here where we have a situation where we have a interest being a major concern. What will interest rates be? They have gone all over the place. One thing I want to point out on this chart is that when you look at a couple of spots here and you see these really weird things, the reason for this is I am using, in this case right here, a continuation chart. And when you use continuation charts, you have these changes from one month to the next, and all of a sudden you get these abrupt changes. So it's a little bit more disconcerting than it might appear if you just were to use a regular month contract. But this is a contract that I use continuous charts to be able to go back for a few years. So the interest rate situation is going to be an interesting to watch in the next year. Crude oil, everybody knows about crude oil, and everybody's heard the talk about how how crude oil was such a fantastic thing. It made the highs up here at 147, and then it plunged all the way to the lows down here in the low 30s. So crude oil has had quite a spectacular change in the last 18 months or so. The bulls and the bears both did pretty well in 2008. They had their time. 2009 was pretty much a big year for the bulls as the market went up. And of course, recently we've had the little rally here at the end. And crude oil, again, a relatively small blip on the screen, just to keep you, as a reminder that here's a market that way back to January of 2000. $25 or a little bit better. We've certainly exceeded that by far. Crude oil in 2009 made an advance of about 78%. So it's been a big mover, market to keep an eye on. Gold. Now there's another one that has really had everybody excited recently. When gold was down here at this lows around $700, it was kind of like during a period of time when everybody was a little depressed about the economic situation, and you thought that gold might be the haven, the safe haven. It has since then picked up, pretty spectacular rally. It has gotten above the $1,000 again, but look what's happened to gold recently. The question now is, what will happen to gold in 2010? Some people are contending that gold is going to back way down, that gold has reached its peak for maybe multiple years. Others are saying that no, we're going to have some high inflation, gold is going to go back up. A lot of questions about gold. It was a good year in 2009. As you can see there, it made almost 25% gain in 2009. Other markets that have also had quite a year, when you look at wheat, went from the peaks that we had here a couple years ago at $13. That was when everybody was bailing out of stocks and into some kind of commodities. Wheat was one of the beneficiaries of that, and it reached a peak of better than $13. Now it's come back more down to earth. more down to reality where it would normally be. And it's still, when you look at the price from 10 years ago, we're still at more than double what it was, but certainly nothing like we were when it was at its peak. But if you were to look at markets and kind of try to guess, okay, of all the markets that had a good year in 2009, and again, if you're bullishly inclined and like the bull markets, which was the big market? Which was the big move of 2009? And you might have read this somewhere, or maybe you're surprised at this, but it's sugar. When you look at sugar, it's more than doubled in its price from a year ago, from where it was in this vicinity right here, up to the peaks that it has here. It almost achieved the bubble effect in here, where you look at the market advancing and becoming, the one bubble of 2009 of real note. It's not the $50 level that we were talking about in like the late 1970s, early 80s, somewhere in there when the Hunt brothers were trying to corner the sugar market. But this is a strong market that's been fed by demand. It's had some crop problems, benefit by the weaker dollar. So sugar has been a big market, or was a big market in 2009. Now let's go start see what we can do about a few predictions. Here are some of my predictions for 2010. I know you're going to think these are kind of funny, and they are. We know markets are going to go up, they're going to go down, we know they're going to go sideways. We know that sometimes markets are going to get too high and we're going to have bubbles. We know that some markets are going to go way too low than what you'd expect. So I feel pretty safe in making that kind of prediction, because if 2010 is like every other year, that just seems to be the way it works with markets. You can also pretty well be assured that you can look at weather is going to be a factor. If you will look at weather in any year, you would always assume that weather is going to be a market mover. When it was cooler last summer and everybody was complaining about how cool it was, well, I predicted that it would be colder than it was then in January, and it is, lo and behold. It's interesting to note that one of the reasons that has been given for the energy market increase on Monday was the cold weather snap that hit the East Coast. But it's kind of one of those strange things, because it's as if no one ever knew that there was cold weather coming, when weather is one of those factors that you can kind of count on year in and year out. So likewise, I can now predict that there will be a weather